Good evening, everyone. Welcome to our monthly series, wherein we present outlook for the coming month and recommend few stocks. As you know, the format of uh, this presentation is covered in all respects, including fundamental, technical, and derivative, and wherein we give outlook based on all fundamental, technical, and derivative perspective. So you can get a full perspective of the market from different angles. And also we recommend few stocks from all perspective, like from fundamental, technical, and also derivative strategy. So you can have investment planned accordingly. So to cover first from fundamental side, uh, so what we had seen in recent past is that so in last month, what we had seen that the market started from the bottom and had seen some bounce back, but had given up all the gain towards the end of the series, and also saw substantial decline based on the event which has happened, that is Russia and Ukraine geopolitical issue, which has led to substantial decline towards the end of the series. But overall, market remained in a downward trend or under pressure during the last series. So what we had seen in the last few days is that there was a risk of scenario, that is people were shying away from risk and taking shelter in defensive stocks, or coming out of equity and investing in something like bond and all. So what we had seen is that the geopolitical issue which has come up has further aggravated the declining trend, which was continuing because of the Fed tightening and high commodity prices. So consistently last 3-4 months, we were arguing that these high commodity prices are not sustainable and will have impact on equity market. And we were seeing market losing its stream and coming off from the higher level. But because of these geopolitical issues, the market came off very sharply. But what we are seeing that because of this issue, the energy prices, which was a larger concern in all commodity prices, has got further aggravated, wherein wherein the Brent crude has went up to as high as $105, and also coal, coking coal, thermal coal, all are going up, whereas thermal coal, which is another energy, is near to around $200. The regular prices are of around $80, and similar is the case with the gas also, natural gas also, they are also moving up very sharply. So all this energy basket is creating a lot of problems for the regular operation of the economy and the corporates, and that is being hurt. And because of Europe large dependence on Russia for this energy, we had not seen very large sanctions or any military actions from the other part of the world. And US and Europe are not able to really put a lot of pressure from that perspective on the Russia, and Russia is progressing on the Ukraine side. But if you see the history of these type of geopolitical issues, like what we had seen in case of Iraq, when in March 2003, the military action, this downfall impact was lasting for around 1 month. Then Syria into April 2017, there was no impact on Indian equity market. Then if you see Crimea, that is again Russia has taken over Crimea. At that time, the impact was for a 1 week. And even in case of 9/11 attack on US, the impact was for 2 weeks. And in 2 weeks, the market bottomed out and started moving up again. So all these geopolitical issues are generally an opportunity for good investments. So you get a good quality investment at a reasonable price or attractive price. So these events can be used for that purposes generally, and generally we get a good return in a short period of time on that account. So as such, what we are seeing in this time also, that this geopolitical issues is likely to cool off in some time, maybe a week or two, or maybe at most a month. And with this cooling off of these events, the equity markets are likely to bounce back. But this time, what we are more concerned about, the key issue which we are facing since last 5 6 months, that is of high commodity prices. And because of this event, even the commodity prices has further moved up. So that has further created issues for different economy and also for the corporates. So that particular problem is not getting resolved, and that will create problems once the bounce back of this event is getting over. So if suppose we see a bounce back from this event and the market moved up, then again this problem of high commodity prices will pop up, and that will not allow the market to move up on a one direction. So we will see some restrictions at a higher point of time, maybe around 17,200 to 17,500 level, somewhere in between that. We will see some restrictions coming on the market move. Mainly because the core problem which has started around October, November problem, and that was putting up a lot of pressure on the equity market, is still continuing. So until and unless that problem get resolved, the market performing in one direction or making newer high is quite difficult. So the key problem of high commodity prices are putting up a lot of pressures on the corporate demand or on the margins of the companies. So we had seen in Q3 result also that these problems was creating was impacting the uh, lot of corporate results, and we had seen results are showing some pressures on account of these problems. So these type of weakness were visible in started got visible in Q2, further increase of this in Q3 results, and further got aggravated in Q3 results, and we what we feel that this is likely to continue even in the Q4 result as well. So that will soften the demand and will have a pressure on the margin as well. In Q4 results, there will be some softness in demand on account of Omnicore also, which was there in the Jan month, and in Jan month there was some impact on the demand for some sectors. So that will have its impact. And apart from that, the impact on bottom of the pyramid consumers, which are facing problems because of the high inflations, is likely to continue and will have an impact on the demand side from those peoples. So the high inflation has impacted the purchasing power, and continue to increasing commodity prices is leading to the decline pressure on the margins of the corporate results. So overall near-term results are not likely to be very good. It will be again be driven by a specific sector. Otherwise, the impact will be there on the corporate results. So what we see that post this event, there is likely to be a bounce back, but that will be restricted on the upper side, and the overall range market will remain into range, and then thereafter we will be seeing some profit booking thereafter. So market is likely to remain in the range of around 16,100 to say around 17,200 in the coming series. So that is the perspective from fundamental side. Now I'll request Jehan to talk about fundamental stocks, HDFC Bank.
Yeah. Good evening, everyone. So our first stock on the from fundamental team is HDFC Bank. It is the largest private sector bank with a loan book of more than 12.5 lakh crores. Even on this large base, the bank is growing at 20%. It was growing at 20% before COVID occurred and was eating away market share not only from PSU banks but also from other private banks. Just for example, if the bank grows at between 15 to 20% in future, which we expect it will add almost one Kotak Bank or you can say one IndusInd Bank every single year. So that is the kind of scale we are talking about here. This growth is mainly driven by two things. First, of course, the superior underwriting process reflecting in its best-in-class asset quality. And second thing which is driving the growth is the continuous investments that the bank is making in technology as well as branch expansion. So branches have continuously increased, have grown by around 10 odd % every year. Naturally that has catapulted into overall 20% kind of loan growth. In terms of asset quality, the slippages in last couple of quarters have settled at around 1.6%, which is below the pre-COVID range of 1.8 to 2%. So this gives us comfort that going forward, things will only improve from here. Loan growth has bottomed out in the second wave of COVID. So the June quarter, the Q1, the bank witnessed the lowest loan growth of 14%. Now it has almost gone back to 17% in the December quarter, and we expect it will remain around 17-18% going forward because of the larger base. Our target price for the stock is 1930 rupees, which gives a good upside considering it's a large cap stock. We value the stock at 3.3 times FY24 book value, which is in line with the average historical valuation. That's it from my side. Sir, you can take over.
Yeah, the another stocks which we are recommending for in this series is Infosys. So we had seen that the IT sectors has done very well in the last 1 year, and Infosys has also performed equally well in this period. But in the last 2 months, we had seen a good corrections in the IT sectors, mainly driven by increasing interest rates and corrections in the Nasdaq and overall market. And we had seen some profit booking happening in these stocks. But what we see that the fundamentals and long-term outlook continue to remain strong, and this stock can still perform well in the coming period. The fundamental outlook for the growth and is visible from the order booking which they had done in last 1 year, and are optimistic about the coming period as well. And we had seen that the order booking has grown at very strong CAGR in last 3 years. And also in the last 9 months also, they had done a very good strong order booking of over 7 billion in this period. And the important thing is that the company has outperformed from both revenue growth perspective and even also from the order booking perspective to TCS. And but against that, still the Infosys has remained undervalued as compared to TCS by around 300 basis points. Like TCS is valued at around 27 times, around 26 times price to earning for FY24, whereas Infosys is trading at around 23 times PE. On the other hand, the growth in Infosys is strong and also expected to remain higher than TCS in the coming 2 years as well. So considering that we see some re-rating scope also in Infosys as compared to TCS. Apart from that, if you see the near-term performance in Q3, which is generally a lean quarter or soft quarter, the company has shown one of the highest CC growth in terms of revenue of around 7%, which was one of the highest in all the IT sector, including small IT pack as well. And company has indicated a higher has improved their guidance for FY22 with 19.5 to 20% growth from earlier guidance of around 16.5 to 17.5% growth, and maintain their EBIT margin performance. What we see that looking at their strong order booking, this growth, which is likely to be very strong in FY22 based on also a lower base of FY21, is likely to continue even in 23, though may not be coming at over 20%, but still it is likely to show around 16-17% growth in the FY23, which is considering higher base of last year growth will be very strong. So performance wise, stock is likely to continue to perform, and recent corrections in the prices is giving us a good opportunity for Infosys to buy for near-term perspective. We expect this Q4 result is also likely to be comparatively strong, and wherein the company will be giving some indications or guidance for the year FY23. So that also we expect to be comparatively stronger. So overall, we feel that this stock can be purchased at current price, and we had a target price of 2021, which give considering the large cap company, give a good reasonable return in the coming 1 year. Now I'll request technical team to take up from here.
Yes, thank you, sir. Good evening, all of you. This is Swati. February series, we have seen that it has been majorly volatile. Trading season has been seen, and the rally in the Feb series was taken over by the bears. The sentiments was too cautious because of the geopolitical concerns. Technically, as of now, we have seen that the Nifty was facing a strong resistance at around 17,500 levels, and we have seen a selling pressure which tracked the Nifty towards 16,200 levels. As of now, the Nifty is trading below all the important moving averages, 50, 100, and 200 EMA, which gives some sign of a cautiousness to the bearish view. I believe that 16,200 will act as an immediate support level, and from where we have seen this bounce back rally. Now today the Nifty has managed to maintain a positive closings up by almost 0.78% on the closing basis, which gives some sort of a relief sign. This pullback rally is likely to continue if the Nifty breaks 16,800, the immediate resistance levels. If it's break that level, then 17,000, 17,200 levels can be seen in the near terms. Whereas on downside, 16,500 will act as an immediate support level. Below that level, if it's break that level in the coming days, at such Wednesday or something like that, then definitely again we are likely to retest 16,200 levels on the Nifty end. The overall view will remain cautious itself into the Nifty, but as of now, I believe in this month the Nifty is likely to be trade within the range of 16,200 to 17,200 level. If it's break the above level, say the 17,200 levels, then the upside doors gets open for 17,700 to 18,000 levels on the higher sides. Definitely, the overall view on the market will be remain a cautious. It's a stock specific market. Definitely, one can go for a quality stocks with the strict stop losses. So this is the overall view on the Nifty itself. Stay light on the buy side as such. If the Nifty breaks as such, I said 16,200. If it's break, then we are likely to witness a major selling pressure, which might take a Nifty towards 15,700 to 15,500 levels as well. So let the Nifty settle down at the support level. Let the Nifty get the exact sign of a reversal, then definitely this pullback rally can be seen into the market. This 2 days pullback rally is likely to be continued if the Nifty breaks 16,800 levels on the higher side, 17,000 to 17,200 levels. So this is the current view on the Nifty as such. Coming towards the stock specific, in this month also we have initiated a 2 buy call. पहला buy call है Hindalco के ऊपर. Why I have initiated this particular buy call, this particular stock is already up by almost 7 to 8% today itself, trading near to our target level itself today. Chart के हिसाब से अगर देखें तो just it is trading in the high tops high bottom formation. Interesting fact that अगर आप लेफ्ट साइड में राइट साइड में जो चार्ट दिखा है उसमें दिखाया है मैंने कि ये अपवर्ड राइजिंग चैनल में ट्रेंड कर रहा है. जो भी इंपॉर्टेंट मूविंग एवरेजेस जनरली फॉलो करते हैं 50, 100 एंड 200 उसके ऊपर काफी सारा इंटैक्ट है. इंटरेस्टिंग फैक्ट कि मंथली चार्ट पे इसने एक फ्लैग पैटर्न फॉर्मेशन था और उसका ब्रेकआउट दिया है. आज जैसे ही उसने ब्रेकआउट दिया है 535 का लेवल्स जो हम लोग ने बाइंग रेट रिकमेंडेशन किया था एग्जैक्टली उसके बाद हम लोग ने एक काफी अच्छा वॉल्यूम देखा है. विद वॉल्यूम्स के साथ उसने 580 तक आज के लेवल टेस्ट किए हैं विद गुड वॉल्यूम जो कि काफी स्ट्रॉन्ग फॉर्मेशन था ऑन द मंथली चार्ट इटसेल्फ. टारगेट वी हैव कोटेड 600 लेवल्स. अगर आज किसी ने बाय किया होगा मार्केट में तो डेफिनेटली काफी अच्छे रिटर्न्स मिले हुए रहेंगे. At the current level, the stock is trading closed at 572. I will not initiate to take a buy call at the CMP, but definitely अगर कोई भी थोड़ा बहुत भी selling pressure आता है और सीधा profit booking या कोई भी dips आता है towards 550, 540 की range में तो definitely those who have missed out the rally today, they can definitely reinvest at the level of 540 levels on the downside. We are looking for a target of 600 levels on the upside. उसके ऊपर 620 के levels we are looking for. Downside मुझे लगता है नीचे में 500 का काफी crucial support level है. So those who have missed out the rally today, they can definitely re-enter at 540 levels. Stop loss can be kept at 500. And we are looking for a target of 600 rupees on the higher side. So this is the Hindalco buy call we have given for this month. Second buy call is on DMart. If we look towards the chart of the DMart also, the stock has been shown a sharp correction from almost 4,800 to almost 3,800 levels, 1,000 points correction within the span of 3 to 4 months. As of now, it was just hovering within the near the 200 DMA, 200 DMA. I believe it has a potential. We have selected this particular counter because it was consolidating within the range of a 200 DMA, and I was expecting a breakout in this particular stocks, and which might take us stocks towards 30, 43, 50, 4,400 level was I was looking for this month. Today only this counter has just shown a very smart rally of almost 3.5%. I believe those who have taken today's buy call, today only we have achieved our first target, that is 4350, and second target we are looking for 4400 levels. Technically the stock is well placed above all the important moving average, and after a sharp decline, consolidation breakout has been given by this particular counter. So if you are getting, as of now, if you're getting any dips towards 4200, one can go for a long position, not at the CMP, because already the stock has achieved our first target. So just hold on for a time being. If we are getting any dips towards 4200, one can add on, one can enter into this particular counter for a target of 4350 and 4400 levels. Whereas on the downside, 4000 will act as a crucial support level. So I'm just revising the stop loss from 3950 to 4000 levels. I think that's it from my side. I request derivative teams to take a call forward.
Yeah, thank you, Swati. Hi, this is Neerav here. I'd just like to first let you all know, see, just like last time, in the last series, we had already said, we expect this range bound trade to continue. And that is what really happened, except for the last day where, selling was a little higher. Broadly Nifty remained within range of 16,500 to 17,500 for the whole month, and that is what we expect for this month as well. There's not much change in Nifty data at this point of time. The data continues to suggest open interest is quite flat. It is opening this series at about Nifty is opening this series at 1.10 crore worth of shares, and which is average. Looking at the VIX and PCR, they are both average as well. In fact, VIX has really shot up. It used to be in the range of 17 to 23 odd levels. It has shot up above this level, and it has remained in this range for the whole month, except for the last week where the war had been declared. The VIX really shot up to 31 odd levels. We expect VIX to now stabilize towards the 25 levels and again come back within range of about 17 and 23. So in this series, from the March 10 to 15th of the month, there are going to be election results being declared as well. So VIX will continue to remain high up till then, and then come down drastically. So look out for the same. At this point of time, the premiums are high, but we expect it to fall. Now, looking at the overall open interest chart, we believe Nifty is likely to remain in between 16,500 and 17,500 broadly. And this is on a weekly closing basis. So there can be days where, Nifty can break either the support or the resistance and close below or above the same. But broadly, on a weekly closing basis, it should trade in this range, at least for the first 15-20 days. So the supports for Nifty, which are very strong support areas, are 16,500 odd levels, and once 16,800 is broken above, 16,800 is also a very strong support area, because that used to be a very strong support for the last whole month. Should be a support for this month as well. For the resistance side, 17,000, 17,500, these two levels are very important, and they will continue to be strong resistances on the upside, with 17,500 being the most important resistance on the upside. So definitely, I believe this range is likely to continue. Now, looking at the stock specific front, so we have selected stocks based on the rollovers, and based on these rollovers, stocks which we really like are HDFC Bank, SBI, ITC, Bharti, and Coal India. All have similar patterns where open interest has drastically reduced, so shorts are out of the system, and there is good room for longs to be filled in. So we believe these stocks are likely to witness good buying. So now when Nifty is up, these stocks should be bought, and the stocks that we think can be impacted negatively, even though today they've witnessed buying, whenever the selling comes in, these are the stocks which can probably be impacted on the negative side, and you should sell when the selling is coming in. So those are Infi, Tata Power, M&M, Hindalco, and DLF. These have very high open interest built up and not much space to add more positions, so they will have to shed some positions, and shedding of positions is generally followed by selling. So I believe these stocks can possibly witness more selling pressure going forward. Now, coming to the next slide, we have strategies for Nifty and stock specific strategies. The strategy for Nifty for this particular next 10 days is we believe it should remain within range of about for the next 5-7 days in between 16,000 and 17,000 levels, probably breaking 17,000 on the upside, but not by much. So we have given this sell of Nifty 10th March 17,000 call at 195, and of 16,500 put 16,000 put at 160 odd level. So total premium that we are paying is around 355 points. At this point of time, this when the strategy was given, it was given in the morning. I think the premiums were around 360, 370 odd points, and it has risen to about 400 points. If you have not done this strategy, please do it. And you keep a stop loss of 440 points. So if the premium also rises more to 440 points, we believe that should be your stop loss, and you exit positions. And because VIX is very high, buying options looks very risky, because premiums are likely to fall. VIX is likely to fall as well going forward. So buying options is very risky at that point of time. So I believe the total premium should come down to 200 or below in the next few days, and once it does, you can book profits. Now going on to the next strategy, we've given a buy call spread on National Aluminium, bull call spread, buying the 31st March 120 call at 5.5 and selling the 31st March 135 call at 1.5. So the overall structure for National Aluminium is pretty decent, and it has given a breakout as well. So we believe this stock can move up. Good delivery buying has gone on. Open interest is positive. So overall, we believe it can go up towards 130, 135 levels. So buying this particular strategy is going to be good for the profits. You are getting this strategy at about 4 rupees total premium, and it is likely to rise to about 10 rupees odd. So once National Aluminium goes towards 132, 133 levels, you can book profits around those areas. Your profit will start from sub 123 or 124 odd levels, and anything above 135 you get the same profit. So that is that. So one can initiate this strategy as well. That's it from my side. I'd like to ask Sunil sir to take over, please.
Yeah. Since the report was released in the morning, we are seeing some already movement in the stock recommended on technical and derivative stocks. There are some differences in price mentioned in this because the report was released in the early morning. What we see that you will keep on getting opportunity. You can keep the stocks on radar and keep it watching. So whenever you get an opportunity, you can initiate the trade. What we feel from here is that now those who have any questions can put up on chat box, so respective team can answer the questions, whichever is looking positive, whichever is looking at that questions. So there are already some questions in the chat box. First question is related to TCS. So TCS again, outlook for the near term, that is from 3 to 4 months, looks positive, considering that Q4 is generally a better quarter for from a result perspective, and we had seen some corrections happening in recent past. The good time to buy was before buyback, so you could have given the sales for buyback, and if suppose around 30% sales has gone in buyback, then the balance price for the sales would have been very low, and that has cushioned your purchase. But anyhow, outlook continue to remain positive on TCS, but we prefer more Infosys as compared to TCS in the coming period. So another question which I would like to take is on Biocon, because it has corrected by around 10% in the recent past. Yesterday, because of one event wherein they had acquired one company in the international market at very high price, and also the funding of this buying will be done through the debt, and post this acquisition there will be a very large debt in the books of Biocon. And what is happening, like management has indicated that they will be listing this biosimilar company in the equity market. So what will happen that with that listing, Biocon, another subsidiary that is Syngene, is also listed. So Biocon will become more of a holding company of these company, and then will start getting holding company discount for these businesses. So the valuations get impacted because of the holding company discount. So at such, what we see that the outlook for Biocon in the coming period doesn't seems to be so great. One can look to exit Biocon. Maybe we had seen a sharp correction today. So if suppose we get bounce back in a few days, then one can look for that bounce back. But the outlook is to exit from the stock and may shift it to the another pharma company like Cadila or Dr. Reddy, which has also corrected sharply in recent past, and can look for a gain over there in next 4 to 5 months. Yeah, now anyone of our other analysts can take any questions. Like there is a question on Hindalco also.
Yeah, sir, I'll take the Hindalco question. So there is some confusion here regarding Hindalco. See, first of all, I'd like to tell you, Atul Bhai, that we as analysts are working independently. So technical desk is different, derivative desk is different. Technically, they had initiated a buy around 535 when the stock was around that price in the morning, and it has come up to 570 odd already today. So it is almost near to their target. Okay. Now from the derivative perspective, what we really look at is open interest and rollovers. In the rollovers, generally stocks which are very high on rollovers, they do not move much on the upside at least. So Hindalco has pretty high rollovers, and because of aluminum moving up, a lot of people have bought in. That is why open interest is very high as well. So definitely, there are more positions here. So generally, what happens is at least 90% of the time, the stock doesn't move up, and we believe when this selling will again come in, probably it can come in a day or two, or probably even 10 days. When this selling is going to come in, stocks with high open interest are going to be under selling pressure. So we believe once this selling is going to come in, you got to sell Hindalco from the derivative perspective, and it can probably witness more selling than the other stocks because it has high open interest, and everyone will try and come and book positions over here. So that is the fact that we have given. We have not given a call on Hindalco, but we are telling you these are the stocks with high open interest and are likely to witness more selling. I hope now I am, you understand the difference between the technical and the derivative perspective.
Yeah, I would like to add something to this. What has happened at the time of IT shares getting corrected? Everyone, whole market was positive, but our derivative team has given the indication that the situations are not so exciting at that point of time. And in that particular series, when Nirav was talking about IT shares, one should be cautious. Shares were moving up for a few days, but towards the end of the series, all the IT shares came down. So this is more of an indication of you need to be cautious in these stocks in the coming period. So it's a more of a alert which are coming and are been talked about by the Nirav. So I think one should take in that perspective. Now, any other questions?
So there is a view on IOC and ONGC, so I'll take that, sir.
Yeah, please.
See, IOC and ONGC overall, if you see, their ONGC seems to be very positive from this point of time. Open interest is positive, rollovers are positive, even delivery-based buying is going on, but the consolidation is going on in this company. I think this consolidation should finish very soon, and this stock can again move up to the 200 odd level. So this is one stock that should be bought. IOC also, even though HPC, CL, BPCL have fallen, this stock continues to have a positive chart and a positive open interest profile. I believe this stock can witness buying, but if you ask me, of the two, ONGC should be bought, and IOC at this point of time, I think it is coming out of Nifty as well. So that can be a little negative. So it can probably impact the stock. At this point of time, ONGC should be bought. It can give you very good returns, and IOC, you should wait and watch. If it crosses about 120 odd levels, that is where you buy with a stop loss of 110. It can give you 135, 140 odd levels then.
Yeah, Tata Power, if Swati can give support and resistance.
Yes, sir.
And also talk about Bank of Baroda and Canara Bank.
Yes, sir. Tata Power, we have seen that the stock has showing us some bounce back rally from 200 onwards to as of now it is just trading at 223 level. I believe this rally is likely to be extended up to 231, the resistance provided by 50 DMA. So those who are having any long positions, they can hold on for immediate target of a 231, and if it's break that level, 240 levels can be seen. And stop loss can be kept at 215 level. So with stop loss of 215, one can hold their long positions into the Tata Power. Coming towards the another query on Bank of Baroda, this particular stock as of now just trading within the sideways between the range within the range of 100 to 107 8 levels. Once it manages to give a breakout of the range bound trading session, say up to 108 levels, 108 level is the breakout level. If it's break that level, then we are likely to witness a good amount of a buying, which might take the stocks towards 215 to 120 levels on the higher sides. So those who are having any long positions, they can remain intact with the stop loss of 100 rupees. And those who are looking for to take a buy call, just wait and watch. Once it's give the breakout of 108 level, they can enter into the long positions for a target of first target be 115, and above that level 120 levels can be seen, and stop loss can be kept at 100 levels. Another query I would like to give an answer on the IRCTC. This particular counter is just trading above 800 levels. As of now, it's heading toward its 50 and 100 DMA. I believe it has a potential to reach up to 840 levels. This is the short-term target I'm giving you, that 840 levels is likely target for this particular stock. Downside, it has a support at around 780. So those who are having any long positions, they can hold on for a target of 840 with a stop loss of 780. Thank you.
Yeah, I will take up 4 odd stocks. Canara Bank and Bank of Baroda, Swati already discussed, but even fundamentally, the result this quarter was very good, and on all parameters of asset quality, slippages, SMA book, restructured book, the result has improved. So one should expect that in the near term, both the stocks should outperform. Another query is on IEX. IEX is the pioneer in the power trading in India, and going ahead, as the government is focusing on one nation, one grid, IEX will should benefit being a monopoly kind of player. Volumes on the platform have been on the rise since last many quarters, with new product addition and shift of volumes from traditional modes of transaction. Going forward, we think launch of MBED will be important, and that will be a significant boost to volumes. So we are positive on this stock. One more stock, HDFC Life, somebody has asked. So this quarter result was good, around 20% kind of growth on APE. This has been the trend for this company in last 3-4 years. If you see, annualized premium equivalent has grown by around 20-25%. So we remain positive over here. Also, protection mix continues to rise. So that is also positive. One should expect around 18-20% kind of returns from HDFC Life. Thank you.
So I would like to give an answer on the HCL lenses.
Yeah.
This particular counter is trading at the 18.5 levels. The overall view technically as such is cautious to bearish itself. Mr. Agarwal, I would like to suggest you to be cautious on this particular counter. I believe it has a potential to reach up to 15 to 16 levels. So I will not initiate any long position at the CMP, but definitely if you are getting a dips towards to 16 to 15 levels, then one can take a long position. But at this current market price, my view is little bearish on this particular counter. If you're having any long positions, hold, but with the strict stop loss of 17.5. If you're getting any breakout up to 20 levels, then only we can witness some positive move in this particular counter, which might take a stock towards to 22 levels. So at the current level, my view is cautious, but you can hold on with the strict stop loss of 17.5 levels. Thank you.
Swati, if you can talk about Bank Nifty also, I think in presentation you skip that.
Okay, sir. Coming towards the bank nifty, as I said, my view was cautious on the nifty itself, and we are expecting some bounce back rally on the nifty up to 16,800, which has almost touched today. If it's sustained above 16,800, we are looking for a target of 17 and 17,200. Looking towards the bank nifty chart, we have seen that the bank nifty has almost touched the low of 34,990 levels, and from there we have seen a good bounce back rally. From the last 2 days, we are witnessing that the bank nifty showing a bounce back rally, but it fails to maintain give a positive closing above the previous day candle as such. If we look towards the nifty candle also today, it has broke the yesterday's high also, but the bank nifty has not given a breakout of the Thursday's high level, so which gives us some sort of a cautious sign compared to the nifty. I believe bank nifty has a very crucial resistance at around 36,500 levels. If it's break that level, then only we can witness some sort of a positive momentum towards 37,000 or 37,500 level. But at the current level, my view is little bit cautious on the bank nifty compared to the nifty. Downside, the immediate support will lies at 36,000. That is a psychological support level. If it's break that level, then again we are likely to witness a selling pressure into the bank nifty, which might drag a nifty bank nifty towards 35,500 to 35,200 levels on the downside. So these are the important support and resistance level need to be watched in the coming trading sessions, but the view will remain definitely cautious on the bank nifty.
This is a question on Dabur India. See, Dabur or all other FMCG companies are underperforming, including HUL, Britannia, Dabur, the Godrej Consumer, all are underperforming. Main key reason for underperformance in the near term is on account of high commodity prices, and because of the inflationary prices, and they are taking a lot of price increase in the near term. The demand for the product has shown some weakness, and because of that, we are not seeing volume growth in these companies. Even in the last result also, the volume growth was not good. And similar will be the situation even in the fourth quarter as well. So the volume growth will be impacted in the fourth quarter as well. Though the prices and valuation has become reasonable for most of the company, but near term the stock may remain sideways or may underperform the overall market. But considering a bit long-term perspective of say around 9 months or 1 year, these stocks can be accumulated over a period of time. Specifically, Britannia or Dabur can be accumulated with a time horizon of 9 to 1 year perspective, wherein you can these are more of a defensive stock as compared to the overall market trend. If suppose the market correct sharply, these stocks will keep your portfolio a bit defensive as compared to the overall market. So one can look to accumulate the FMCG stock at current point of time. There is a question on Federal Bank. If Jan, you can take.
Yes, sir. So Federal Bank has been one of the better mid-cap banks in terms of asset quality. Practically, if we see last 3-4 years, it has had the lowest slippages in the entire sector. But the issue with Federal Bank is that it has being a mid-cap bank, it has a big exposure on the corporate side. Almost 40% of the book is coming from corporate mix. So where the margins are very low. That is why if we see the bank makes a net interest margin of barely 3.2 odd %. And with these kind of low NIMs, it is very difficult to make a ROA in excess of 1%. That is why we see that, despite having one of the best asset quality in mid-cap banks, the stock continues to underperform. So yeah, it will perform in line with Bank Nifty. I feel it won't give anything extraordinary return going forward.
There is some question related to very small cap or penny stocks. What I would like to talk here is that see, we had seen run up of around 2 years, and in 2 year all the people were participating, like mutual fund, FII, retail, everyone was participating. But the retail investors are the key driver of all these penny stock, like what you had asked for, Alok Industry, Coffee Day Enterprise and all, Uttam Steel and all. Not a single institutional investor will buy stock in this scenario. So if suppose market turn bit negative, you will won't find a buyer for all these stocks. All these stocks runs when either they should show very strong performance, or there is a uh, good demand from institutional investors. So Coffee Day, there is no, it's towards the end of its life, or there could be some event wherein this company can be taken over by someone, then only the demand can come from this. So there is no fundamental base on which we can recommend, or we can say on this. If suppose some event happens, like some company take over this company, then definitely this stock can perform. But in that case also, if suppose it goes into NCLT, and in NCLT, if suppose the existing equity shareholder value is made to zero, like that has happened in many cases, then the investor can lose out to a lot of money. So it's a very high risky game, and the time is not for small cap stock. We were cautioning since last 4 5 months that one should be very careful in small cap stocks and penny stocks, because after a long run, we had seen in the past that all these stocks find it very difficult to sustain, and people lose a lot of money in these type of stocks. So be careful. Try to avoid, this is not the time to buy penny stock and all, and be careful in those stocks.
There is a question on L&T Finance also. If we look at this company, retail and wholesale mix is almost 50-50. 50% comes from infra loans and real estate loans, where company is consciously reducing the exposures. So that book is actually declining, and on the retail side, the two-wheeler, microfinance and tractor loans, that book is growing. So net, if we see since last few years, the loan book has practically not grown. It has been stagnating at that 80,000, 85,000 kind of figure, crores figures. And going forward also, we don't see any improvement in loan growth. On asset quality side also, there is nothing special about the company. I mean, it is not a leader, or it is doing anything exceptional in any of the areas that it is present in. So nothing to be really positive about it. I think it will continue to underperform the overall markets.
So that's all from us. If suppose you have any more queries, you can write to us on research@nirmalbank.com. We will try to answer the questions. Thank you very much for attending this meeting, and have a good evening, and good coming series for your investment and trading. Thank you very much.
Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.